Good day, ladies and gentlemen, and welcome to our class called Architecture Trading. Now, architecture trading simply tries to take the concept of reading price action and reading charts and put it into something that we can easily understand. And many times traders have a difficult time seeing or imagining what price or interpreting what price is trying to tell them. And when we take a concept like architecture or buildings that we deal with every day, that we see every day, that we understand, we can start recognizing these on our charts. Okay. Now, there are many large players in the Forex market, such as hedge funds and large banks, that have advanced computer systems that constantly monitor any inconsistency between the difference in currency pairs. Now, granted, today you have scanners, you have robots, you have direct feeds. We have the data just as fast as these big hedge funds and large banks, but we don't have our computer systems. They have these huge advanced computers with all these programs that they've written and designed inside their own company that are looking and monitoring everything. We have ourselves, we have our brains, we have our abilities, but we can't necessarily compete with them. So given all of these programs out there, it's hard or very rare to see that an inconsistency will last longer than a few seconds, because these computers for the big banks just jump in. If they see it and it does this, and this in their black box system, they just trade millions and millions of dollars and take advantage of that inconsistency. So by the time we're able to enter the market, to see it and enter the market, they've already taken advantage. They're actually coming out of the market while we're jumping in. So there's got to be a way that we can not compete with them, but make profit. So many traders turn to Forex technical analysis because it presumes that all the factors that influence a price, there's economic, political, social, psychological, have all been factored into the rate. So with many investors and so much money exchanging hands each day, the trend and the flow of the capital is what becomes important, rather than attempting to identify a mispriced rate. So technical analysis is a big scary word, and a lot of people freak out. But if we take the word technical analysis out of the equation and rename it chart analysis, it gets a little bit more comfortable, because everything and anything we do on a chart, whether it's just looking at a chart, whether it's putting trends and lines on a chart, all falls in the field of technical analysis. Now, when we can take this scary stuff and put it into terms that we can understand and that we can see, we don't have to freak out anymore. There's people that have tried, and there's patterns out there called the head and shoulders. Okay? Because we can imagine in our brains what a head and shoulders pattern would look like. There's chart patterns like triangles. We can imagine those. There's even the cup and saucer. We can imagine those. But they're also very, very hard to see on charts, because charts are very active. They're moving all over the place all the time. And to recognize these development, these patterns, can be a little bit difficult. It's like putting puzzle pieces together. So when you become a trader, you have to have determination, hard work, practice, individuality, practice again, more hard work again, repetition, observation, and experimentation. So what I've tried to do with architecture trading is give us some easy to understand concepts that we can actually imagine and put to work for us without freaking out. Now, in today's class, I'm going to use the term security. I'm going to probably say Bitcoin, I'm probably going to say Google, I'm probably going to say Facebook, I'm probably going to say the euro. But I'm not referring to any really specific asset. I'm referring to all publicly traded financial instruments. Similarly, I intermix the terms investing and trading. Typically, an investor takes a long-term position while a trader takes a much shorter-term position. In either case, the basic concepts and techniques presented are equally adept. Now, this big scary word technical analysis comes down to every day. I think the first question people ask me when I walk in the office, my first phone call of every day, the first time I'm introduced to somebody, they ask me, what should I buy? Especially with our virus situation, our volatility. Everybody's saying, what do you think the markets are going to do tomorrow? What should I get rid of? What should I sell? What should I dump? What should I buy? I have no idea. Because wouldn't investing and trading be easy if we knew the answers to these questions? But I don't have a crystal ball. I don't have a Ouija board, and nobody does. So if you're attending this class in the hopes that technical analysis has the answer to these questions, these magical questions, they don't. However, if you're attending this webinar with the hopes that technical analysis applying architecture trading will improve your trading, that I have good news for you. It surely will. Now, unfortunately, we're going to get stuck in a boring story. But it's a story that you should be able to understand and we can put on charts. So if we imagine, before we go on to the boring story, that we can see on a price chart a high-rise building, a low-rise building, a mid-size building, okay, just in price action. Price is either moving up like it's moving up into a high-rise building, or price is bouncing around between floors in a low building, or it can be sailing up like it's going up in an elevator in a high-rise building. Okay. Price bounces up and down. And if we imagine that we shove you inside the elevator in one of these buildings, what do you have? You have support, which is holding you up, below your feet. You have resistance, which is above your head. You got to go through that ceiling to get to the next level. And you keep breaking through those ceilings to get to the next level. Now, you have no idea where that elevator might stop. And the fact is, since you're just a hypothetical gold trader, you don't have hands either. So you can't control the buttons. So you've got to be able to evaluate where that elevator is going to go, when it's going to come down, what floor it might stop on, and where your support level will be, and what floor, how many floors you have to push through to where it's going to stop the next time. So imagine price moves like an elevator, and when you go up, the floor that supported you before becomes your resistance. The resistance above your head becomes your support once you've moved above it, and it becomes the opposite when you move below it. You could fall all the way down into the parking lot, or you could make it to the laundry room. So we have four-story building trading, we have mid-rise trading, we have high-rise trading, elevator trading, underground parking trading, and basement parking trading. Okay, so imagine that. Let's look at a chart real fast. I'm going to take you over some live charts. Now, what are we looking at here? We're looking at the Bitcoin live chart, and what are we seeing? We're seeing price move up from the basement all the way up to maybe it's the ground level, maybe it's the first floor. Okay, but we have to identify what this is. Well, this more looks like a four-story building trading. Price moved up, went to the roof, came back to the ground level, moved back up to the roof, and is coming back down to that ground level again. Here we see high-rise building trading. We see that elevator steadily moving up, and each one of these could be a floor and a ceiling, floor and a ceiling, floor and a ceiling as the elevator is moving up and down. Again, here we have a beautiful push. So here we're pushing out of the basement. Okay, we push up to the ground level, come back down to the first floor, go back up to the roof, come back down to the second floor, and we're stuck on the second floor now. Oh, we moved up to the third floor, came back to the second. Okay, well, once we make this observation, we can then make some important analysis. Okay, because we can decide by observation how we would want to understand what is happening. So let's talk about my four-story building. Now, you're walking down the street and you observe this whole entire block of a four-story mixed office complex. It's got retail on the ground level and offices on the upper levels. And you can even look up and you can see that there's a smoking level where the people are all out on the balcony all the way up top. Just observation. Now, it's on a busy downtown corner. And you're downtown, you get off the train very early, and this building is right at the train stop. And you got off the train very early. Well, that's like maybe you're looking at the markets in the Chinese or the Asian trading session. Now, because it's very early, there's not lots of people out on the streets yet. There's not lots of people coming to work. There's not lots of shoppers out there. So the movement is slower. You walk into this huge retail complex on the ground level, and you notice it's full of coffee shops, a donut shop, bagel shop, a smoke shop, an all-you-need shop. And in the center, there's some nice boutiques. Okay. And you look around, so people are stopping in the morning, getting their coffee. They're going through the building on one side, out the other side. People are picking up their cigarettes, and it's got a steady flow of activity. And you notice in the back corner, there are these two big gold elevators. So you walk over to these elevators, and the door opens. You see you're on the ground level. You see there's 4 stories above, and the top story being the roof, or the roof deck. Okay. And the door closes as you step inside. Now, it's early in the morning, so people really haven't come to work yet. So the elevator goes down to the basement. The door opens, and you see it's a maintenance basement. You can see cages where there's brooms and mops. You can see a little sign that says building manager's office. Okay. And you can see where everything is stored. And what happens is a little old lady jumps on the elevator with her mop and her bucket, and she pushes 1. The elevator goes up to the ground level, goes up to 1, and the doors open on 1, and she gets out with her bucket to clean the hallways. And you can notice it's beautiful dark wood. It's professional offices, and you can see signs. Now, you can't step off the elevator, but you can see signs. And you see Dr. So-and-so's office, optometrist's office, lawyer's office, okay, with arrows pointing down these dark, long, beautiful hallways. Door closes. Opens on the second floor. Okay. Second floor opens. There's not many doors and offices, because what it is, it's the second floor of the offices that are inside. So you have to go into the doctor's office to go up the second level. You have to go into the lawyers, and that's where some of the lawyers have the floor. But they all go in through their own entrance. Okay. The door closes and it opens up on the third floor. And you notice it's conference rooms, because big sign says conference room. And you see where conferences are scheduled. And it's where the lawyers have conferences, where the doctors have conferences, where there could be outside conferences. And you see a schedule board. You see there's not a conference scheduled until 11 o'clock and 1 at 2 o'clock. Door closes again and goes up to the third floor, the fourth floor, the roof floor, opens up, and there's this beautiful roof deck. You can see all these balcony doors opening up for people to sit outside and smoke. Inside, you see vending machines and sitting areas and, places for people that work in the building to have lunch. So what have you done? You've observed the asset that you're selecting, and it's moving up and down between these floors because it's in a low-rise building today. Now, you've also observed the time, and you've seen the basement. You've seen and determined what's on each floor, how important those floors are. You've seen on the floor with the conference room that there's economic events scheduled at 1 o'clock, 11 o'clock, and 1 o'clock that could affect your asset. Okay. Now, it's early in the morning, but now it moves a little bit later and people are starting to come to work. So the ground level's busy, but most of those people are just passing through. Okay. The housekeeper's still going up and down the elevator, but people are starting to come to work. So you can start monitoring the movement of that elevator, because most of the traffic coming in and getting on that elevator going up is going to stop at the first floor, because they're going to get off and go into their offices. There's very little traffic to the second floor. because there's very little up there that you can get to, because you have to enter through the main entrance on the first floor. Conference room floor, there's no conference till 11 and 1 at 1, so maybe the housekeeper will go up there, or maybe somebody might go up there later when they come to work to set up for the conference. But you probably will have some traffic going from the first floor to the roof, because the people are coming in with their morning coffee and going up there and having a cigarette, or going up there to get their morning coffee if they don't have a place in their office. And so what are you going to have right now is the traffic. The flow is going to be up to the first floor, then most likely it's going to skip 2 and 3 and go up to the roof. So we can predict with some type of statistical understanding of where price should be moving at this time. So we've identified the major levels of support, the major levels of resistance, and the movement of the asset, where it should stop and where it should go to. Now, a little bit later in the day, as more and more people come to work, and we get closer to that 11 o'clock conference, there's a more likelihood that elevator is going to go up to that conference room floor. There's going to be a lot more traffic between the first floor and the roof. And once that conference starts at 11, there's going to be a lot of traffic up to the roof deck. So statistically how often that price, when it's moving up, is going to stop at the first floor. And once it stops at the first floor, it's most likely to go to the third floor, and then it's going to go up to the roof. Almost every time that elevator goes up, it's going to go up to the roof. What is going up the roof is probably going to be referring down to the first floor to drop those people back off of work and then make it to the ground level and then turn around and go back up. Well, what you've done is you've analyzed all the activity in that trading in that range for that asset. You've identified key levels of support and resistance, or what we call price action. So it's all about being able to interpret price action on your charts. Now, price action is a form of technical analysis that focuses solely on past price that have traded in the markets. Price action trading is a discipline of making all of your decisions in trading from a clear price chart. This implies that there are no lagging indicators, except for perhaps some moving averages that may help to determine dynamic resistance and support areas, along with trend direction as well, whether the elevator is moving up and down. Support and resistance are your floors. All financial markets create data concerning the movement of market prices over varying time periods, and this data is demonstrated on price charts. Considering that price charts reflect the beliefs and the action of all market participants, either human and computer, trading a market during a particular period, and for those beliefs as displayed on the market price chart in the form of Forex price action. So since economic data and other world news and events are the catalyst for price movement in a market, we do not need to analyze them in order to trade the market successfully. All economic data and global news that causes price movement within a market are eventually reflected via the price action of the market's price chart, or the movement of that elevator. As market price action reflects all variables influence the market for any given time period, exploiting lagging indicators like MACD or the stochastics or RSI and others can sometimes be a waste of time. There are traders who might say that price movement provides all the price action signals you will ever need to design a profitable and highly probable trading system. Those signals are collectively known as price action trading strategies, and they will deliver a way of making sense of the market's price movement, as well as assisting in predicting its future movement with a high degree of accuracy in order to grant you a high probability trading strategy. So thank you very much for joining us. Think about this, and think about imagining an elevator in the markets, and think about the building that elevator would be running in, and then imagine the traffic, the flow of people in that elevator. Thank you very much for joining us, and visit all our other videos, and please subscribe. Bye now.